Hello everyone, welcome back to your channel. This is Abhishek from My Loan Card. Today we are going to dive into a crucial topic that many home buyers overlook: choosing a home loan wisely. So grab a seat, hit that like button, and let's get started. Now we all know that interest rate is a significant factor when choosing a home loan, but it's not the only one. Interest rates might lure you in, but there are other charges that can significantly impact the cost of your home loan. Processing fees, documentation charges, legal charges, these small charges can add up quickly, and you want to be aware of what you're signing for. Moving on to the insurance, this is another area that often catches borrowers off guard. Some loans might require an insurance, and the premium can run into several lakhs. Now, primarily, there are two type of insurances that are required. They're not mandatory though, both of them. They are required at the time when you avail a housing loan. The first insurance is the insurance for you, where if unfortunately anything happens to the borrower, the insurance amount at that point in time will be paid in full by the insurance company. Insurance is optional in nature, so if you already have an insurance which your liabilities, there is no point in taking an additional insurance because that premium is going to cost you a lot of money. So the second insurance in regards with the housing loan is the insurance of the property you're going to buy. When we talk about the cost of the property, or when we take the cost of the property in this insurance, it's only about the cost of construction, not the cost of land. So let's suppose if you have a flat that cost around, the market value is around a crore. The insurance is not required for a crore. The insurance is only required for the amount one spend if somebody has to rebuild that house. The property insurance is mandatory by the RBI because the property is the security that is with the bank. Now, till the time you have a loan on your property, loan on your house, the property belongs to the bank. So it becomes mandatory for the bank to insure your property against any natural calamity, could be an earthquake, fire. Now we are moving on to the prepayment limitation. It has been observed that most of the housing loans, even if they are taken for a long period of time, concluded or gets paid off in about 8 to 9 years. It is imperative for you to check if there is a prepayment penalty. It means if you wish to prepay your loan or if you may wish to make an extra payment, is there a charge involved in it? When you are opting for a flexible home loans, there is a very good possibility that you would not have to pay any prepayment charge whenever you wish to close the account. However, with some banks, there are a few limitations because there are some banks which can limit your prepayment to a certain percentage of your outstanding home loan balance. There's another thing I need to talk about. Most of the banks these days, they offer home loans which are connected to the repo rate. It has been observed since 2020 that the repo rates are on an increasing trend, and we are possibly at the all-time high for the repo rate. The banks are also charging a fairly decent interest rate on housing loans these days. But there is a very good possibility as the inflation comes under control, the RBI might reduce the repo rate again. And when the repo rate falls, ideally your home loan interest should fall again. But it has been seen in many cases that when the repo goes down, the bank generally increases their margins so that the whatever the decrease happens in repo, they most of the times increases their margin by the same percentage. So you do not get that benefit if a bank does that. Whenever you realize that your home loan is not home loan rate is not being reduced, even after the RBI has reduced the repo rate, you might have to get in touch with your bank, and they will probably ask you for a conversion fee to reduce the rate, and that is where the catch is. It happens a lot of times, and mostly with the private banks, there is a conversion charge involved, and that conversion charge is about 0.5% of the total outstanding. You do have an option to negotiate the conversion charge, but still, even if you have to pay it every 2 year, 3 year, then that adds up to the extra cost, plus the amount of interest you have lost because the reduction in the rate has been delayed because the bank was waiting for your conversion request. Now, so while opting for a home loan, just make sure that whatever bank you're choosing do not have a conversion rate, and reduction in any reduction in repo should directly reduces the rate the bank is offering you without your interest. Conclusion, my friends, while interest rates are vital, they're just one piece of the puzzle. Consider all charges, insurance requirements, prepayment limitation, and conversion charges before signing on the dotted line. It's your financial future, and being well informed is the key. Thank you so much for joining me today. If you found this information helpful, do not forget to give it a thumbs up, share it with your friends, and hit that subscribe button for more valuable insights.